Hello guys, today we are going to analyze the stock of Zydus Wellness, which belongs to a parent group of Zydus Cadila. So before looking at the fundamentals of the stock, let us understand about the company and its business. So company has good experience of 25 years. It has four brands which are the market leaders in their category. Looking at market capitalization, we can say that it is somewhere between mid cap and small cap. Stock has doubled in 5 years. Also, some of the famous brands of the company include Glucon-D, Complan, Sugar Free. Now we'll study more about these brands in further slides. If we look at the shareholding structure, we can see that promoter stake is around 63%. Other parties have 16% approx. LIC also has stake in the company, which is around 3.2%. Thrapsy Care has 12.5% approx and Zydus Family Trust remaining 4.29%. If we have a look at their brand's leadership, we can see that in instant energy powder, they have Glucon, which is the market leader, Complan and health food drink, Sugar Free, which is almost used by every diabetic patient, is a market leader in its category. In heat powder, there is Nycil, Nutralite, a substitute for cholesterol-free butter, Sampriti, a ghee brand, Everyuth in cosmetics, and Sugarlite for low-calorie sugars. Now, if we see the market share of Glucon-D, we can see it is 59%, 5.4% for Complan. Sugar Free has market share of approx 94%, so it almost has a monopoly in its category, which is a very good news for the company. 34% for Nycil. So looking at all the products like Sugar Free, Sugarlite, Health Drink, Nutralite Butter, we can expect the demand of such products to grow in the future. Thus, the outlook for the company's product is positive. So the guys market cap which we saw earlier was of the month September, but in the recent time the market cap has grown because share price has increased. So current market cap is around 15,000 crores. So we can say yes, company is mid cap. The current price is around 2400 rupees. The book value of the stock is 718. When we compare the stock P with the industry P, we can see that P ratio of the stock is around 52 and industry is 45 approx. So stock has a slightly more P than the industry. But return on capital employed for the stock is just 6% and return on equity is only 6.19%. So these return ratios are not very impressive, while debt to equity ratio is 0.12. So yes, there is not huge debt. But if we look at the company's operations, we can see that the company recently acquired Hens India in 2019, which enabled the company to add brands like Complan and Nycil along with Sampriti Ghee. If we see some of the pros about the stock, as we discussed, that company is debt free, almost debt free, it has been reducing debt. It also has a good profit growth of approx 9.30% a CAGR, and company has been maintaining a healthy dividend payout of 21%. In the cons, yes, book value is little high and promoters holding has decreased in the last 3 years by 7.7 percentage. So this is another drawback. Having a look at the profit and loss statement, we can see that sales of the company have improved every year, especially in the last 2 years. Just see the jump, guys. In 2019, it was 843 crores, then almost a double in March 2020. Even the operating profits are increasing, but operating profit margins have reduced from the past. They were 25% in 2011 and 18% in 2021. EPS of this share has also improved from the past, but from if we compare in the recent time, in the recent years, we can see it has almost remained constant in the range of 24 to 27. So if company is able to improve this EPS, then it will be another positive about the company. Balance sheet, then we can see that reserves are growing with time and company has improved their reserve, especially in the last 3 years. Just see here the jump, guys. It was 652 in 2018 and now 4500 in 2021. If we look at the industry, then FMCG industry size is expected to grow by 7.9% from FY21 to FY25, and the same growth rate for health food drinks industry. But glucose powder industry size is expected to grow at a rate of 23 to 24% in next 5 years. Having a look at the distribution network, then the products are available with the grocers, which are general trade channels. Modern trade include DMart, Walmart, chains, pharmacy, institutional channels, also hotels and restaurants. They are exporting their products to 23 countries, and products are also available on e-commerce platform like Amazon, Flipkart, and in the recent quarter, company achieved a very good growth in this e-commerce segment. These are the countries where company is exporting its products. Most of these countries are from Asia and Africa, but it also includes New Zealand. Zydus Wellness is very focused on innovation across products. They are either introducing new products every year or making changes to existing ones. If we compare the quarter-wise performance in the past 2 years of quarter one, we can see revenue has slightly declined from the previous year. Even gross margins have declined. EBITDA has declined by 1% and profit after tax has improved by 4% in QY FY21. In the past earnings, companies average growth in earnings have remained 2.3% in the last 5 years. So this percentage is not very impressive because we can see that industry has grown by 15% in that particular time. This ratio is still better than companies average in the last 5 years, but it is still less than the industry, which is around 14%. If we see a debt to equity position, then 12% is the current debt to equity ratio of the company. This blue line is the equity part, red is the debt portion, while this green line is the cash available with the company. So we can see here that cash is slightly less than the debt, so there is nothing to worry for the financial position of the company. So guys, this is the chart of Zydus Wellness on a 1 day time frame. Now I can find one good support for the stock at the level of 2150, and this level was acting as the resistance for the stock. We can see here in January stock started declining from this level. Then again in the month of April and May stock tried to probe this resistance multiple times. In fact, once it opened above this resistance, but it couldn't sustain the level. But finally, in the month of July, stock managed to cross this resistance. It then again tested it and then took support and then went upwards. So if somebody is already invested in this stock, I think they can continue being invested. Also, stock is currently trading above 50 days moving average also. So I think if someone wants to make a fresh entry, then they should wait at least for the level of 2250, which is near the 50 days moving average. 2285 is another small support or minor support for this stock. So if you want to enter, you can enter at this level also by taking a SL just below this level. So guys, this was all from this video. If you found the content helpful, then please don't forget to like the video and subscribe to this YouTube channel. Thank you.